Hello, my name is Julien Lyon. I'm a financial analyst and the founder of LPE Research, an independent equity research firm specialized in French small caps. Last week, we have been working on the company Mersen, and today I am going to present our first analysis of this stock. Before I begin, I would like to remind you that this video is not an investment advice, but only an opinion. We do not do any business with Mersen and do not hold any long or short positions in these shares. Having said that, let's get started. Mersen is an industrial company that makes carbon and graphite products and applications. The company is organized around two divisions. The first segment, advanced material, accounts for 55% of sales and includes products that resist very high temperature and products that protect against corrosion. The second, the electric power segment, represents 45% of sales and includes industrial fuels and power conversion products. Mersen is a global group that generates 1/3 of its sales in Europe, another third in North America, and the last third in Asia. It also has leadership position in most of its markets. Mersen is world leader in component for electric powers market and in current collection for the rail market. It's co-leader in graphite anti-corrosion equipment, in brushes for industrial electric motors, in high temperature application of isostatic graphite. It is number 2 worldwide in industrial fuses. 1/3 of the group products are destined for process industry, particularly metallurgy, 11% to the chemical industry. Transport, especially railways, accounts for 14% of sales. 1/5 of sales are to the energy industry, especially renewable energy, and almost 1/4 of sales are to the electronic industry. As it can be easily understood from its market, Mersen is a cyclical group sensitive to the general economic growth. The group was strongly affected by the crisis of 2009 and 2020, with strong contraction in its turnover. On the contrary, Mersen sales accelerate in periods of economic recovery. But the group can also be sensitive to specific market developments. For instance, between 2011 and 2014, Mersen has to face a collapse in its sales of solar energy products linked to the transformation of this industry. In 2016, the group suffered from a sharp downturn in the US petrochemical markets. These ups and downs in sales have marked impact on industrial group's margins. In good times, Mersen has an operating margin of 10 to 12%. In time of crisis, the group generally has to implement major restructuring to remain profitable. In the end, over the last 15 years, the group turnover has only grown by 2% per year and EPS has remained very stable. Given its history, the Mersen share is quite logically a cyclical, volatile, and fairly poorly valued stock. Over the last 15 years, the stock has followed the group performance and experienced many up and downs. However, Mersen asset and revenue valuation multiples have evolved within a defined band. For instance, the group EV on sales multiple remained historically between 1.2 and 0.1 times. This is also true for EV on IC and price to book. The P and EV on EBITDA multiples of the group are obviously more volatile. In time of crisis, Mersen P are non-significant. Logically, they appear low at the top of the cycle. EV on EBITDA multiples are more stable. On average, the group is valued between 6 times and 10 times its EBITDA, which doesn't seem excessive but seems logical given the group's historical growth and profitability. Mersen is very sensitive to general economic growth, should therefore be concerned about the group performance and its share price. Indeed, the macroeconomic outlook in the world is deteriorating very quickly. Inflation, which showed following the COVID crisis and the war in Ukraine, is at its highest level for 40 years. Faced to that, central banks are obliged to intervene and raise interest rates. This will not be without consequence on economic growth, and we can already anticipate a very strong economic slowdown in the future. Mersen, which published excellent figures last year and has returned to pre-crisis profitability levels thanks to the economic recovery, should continue to perform very well in the short term. For the first half of 2022, we expect its profit to increase by almost 30%. Unfortunately, the group cannot remain unaffected by the strong economic slowdown in such an environment. The group profit should decline again. For 2023, while the consensus is for a 17% increase in the group earnings, we expect a contraction of 8%. If we were to stop at the economic situation alone, we would have a sell on Mersen. However, we need to dig a little deeper in our analysis to form an opinion, and in particular to take into account the group's ambitious growth plan for 2025. In fact, Mersen, many of whose products are essential to the energy transition, is aiming for a strong acceleration of its organic growth over the next 3 years. Firstly, on the industrial side, the group should benefit from a major capacity investment in the US. Secondly, in the solar markets, Mersen expects to increase its sales from 70 million euro to 100 million euro. In electric vehicles, Mersen aims to increase its sales by 40 million euro. Last but not least, Mersen is expected to benefit from its expertise in semiconductors manufacturing processes to increase its sales by almost 90 million euro in electronic markets. Mersen expects its other activities to grow organically by another average of 4% per year, and at the end is aiming for a sale of more than 1.2 billion in 2025. That corresponds to an increase of more than 30% of its sales over 3 years. We are much more cautious than Mersen management. In view of the group's historical growth, but especially in view of the strong economic slowdown, we expect that the estimated organic growth of 40% per year of the group's traditional activity seems very optimistic to us. In 2023, the group's sales to the cyclical, metallurgical and chemical industry could contract. Thereafter, growth in sales not related to electronic and the energy transition could remain moderate. On the other hand, we believe the strong development of the group turnover in solar, electrical vehicles and electronics. In this area, demand is strong and investments are clearly identified. 150 million euro in additional sales are indeed achievable. The group cost should rise, but Mersen should be able to slightly improve its margin. In the end, despite the economic slowdown, the group profit level could increase by more than 50% by 2025 compared to 2021. So, what opinion can we have on the stock? Clearly, we have to take into account the risk of a strong economic slowdown. To believe that Mersen could resist such a downturn would be a mistake. Nevertheless, if we take a longer-term view, we can say, and rightly so in our opinion, that the group could be traded at a higher multiple than in the past. As we have seen previously, Mersen is currently valued at 1 time its turnover, which is in line with the historical average of the last 15 years. However, in a similar environment, we believe that Mersen profit could interestingly rise by 50% within 3 years. Assuming that the group share price rise in the same proportion and therefore to 45 euro, Mersen would be valued 1.2 times its sales. At this price level, the company would trade on an EV/EBITDA in 2024 multiple of 7, which is an historically reasonable level. This will correspond to 45 euro, corresponding also a DCF of 8%. Mersen will have a slight premium on its competitors, in particular Morgan Advanced Materials. But the group benefits a very good stock reputation and better prospect. In the end, even we have to be very cautious in the short term, we believe that the mid-cycle valuation target of 45 euro would be achievable. That's it for today. I hope you have enjoyed this video. If you would like to know more about our opinion, you can contact us and order our first analysis pack. That included our presentation, our forecast, our valuation models, our stock reputation measurement, and allow you to discuss with me. In the meantime, do not hesitate to subscribe to our YouTube channel or to visit our website at lpresearch.com. Thank you very much and see you soon!